Good morning, everybody. It's Monday, December 2nd, 5:25 a.m. Central Time. Grain markets are lower this morning. March corn futures down 2 at 431. January soybeans down 1.5 at 988. March Chicago wheat down 4.5 at 543 and a half. March Kansas City wheat down 3 at 537 and 3/4. March spring wheat is down 2.25 at 589 and a half. Let's start off with another tariff story.
So, Donald Trump proposed more tariffs over the weekend. Trump said on Saturday that he would impose a 100% tariff on BRIC nations if they undermine the US dollar. The BRIC nations include Brazil, Russia, India, China, South Africa, Egypt, Ethiopia, Iran, and the United Arab Emirates. The nations are dissatisfied with the US dollar's dominance in the global financial system. Although the dollar makes up 58% of global currency exchanges, the BRIC nations' share of GDP and efforts to move away from the dollar could challenge its dominance. The tariff proposal comes after Trump threatened last week to put a 25% tariff on imported goods from Mexico and Canada to stem the flow of illegal immigration and drugs into the U.S.
This is what Trump said on X and also on Truth Social. The idea that the BRICS countries are trying to move away from the dollar while we stand by and watch is over. We require a commitment from these countries that they will neither create a new BRICS currency nor back any other currency to replace the mighty US dollar, or they will face 100% tariffs and should expect to say goodbye to selling into the wonderful US economy. They can go find another sucker. There is no chance that the BRICS will replace the US dollar in international trade, and any country that tries should wave goodbye to America. So he was very stern with his words there. So the tariff threat against China is already out there. And that's the big one. When you look at BRICS, the U.S. share of BRICS exports, Chinese exports to the United States last year were $448 billion. That represents 15 to 20% of all Chinese exports. These are just ballpark numbers. Brazil exported $41 billion worth of goods to the U.S. last year. That's about 12% of all Brazilian exports. India exported $87 billion of goods to the United States last year. That's about 18% of all Indian exports. So I don't think that they want to lose that business. I think that would be very bad for the BRICS countries. I think China knows it. I think the other countries know it as well. There's a lot of fear about this. I think that there's this whole narrative that, oh my gosh, the BRICS are going to eliminate the United States from the global soybean trade. And I mean, they're doing that already. Brazil is just growing bigger crops and they're selling them to China. It's happening whether they develop a currency or not. One of the big problems with the BRICS countries attempting to move away from US dollars is that the BRICS countries hold a tremendous amount of dollar denominated debt. As of December 2022, nearly half of China's external debt was denominated in US dollars. By mid-2022, over 50% of India's external debt was denominated in US dollars. Brazil and Russia a little bit more murky, but they need dollars to settle their debt. And if they default on their debt with the United States, that's not a good look. Nobody's going to want to trade with them if that's what they do. There are some other issues here also when it comes to creating a currency that's not the US dollar to be used for trade. First of all, these BRICS countries are all very different in terms of where they're at economically and from a development standpoint. Like China is a mature, developed economy, whereas South Africa is not. How do those two countries decide and settle on a joint currency? That's kind of tricky to do. There would need to be some sort of like really strong trust and maybe a central body to govern this new currency. And I just don't know that they've got it together enough to say, hey, we're all going to get together. We're all going to relinquish some control over the currency just to create this new one. I'm just not sure if that's totally possible either. And then just the fact that the dollar still makes up the vast majority of global trade is a big thing also. So I don't know. I think that I think the BRICS are going to have a tough time using anything other than the US dollar. And if they do, they get tariffed and have fun with that.
A bit more on tariffs. The president of Mexico has clarified the details of her call with Trump following proposed tariffs. After the call on Wednesday, Trump said Claudia Sheinbaum agreed to block migration through Mexico to the U.S. and effectively close the southern border. Sheinbaum, however, said that she simply reiterated Mexico's stance, which is to leave the border open and foster relations between the two nations. Sheinbaum labeled the call as friendly and said there would be more calls between her and Trump. She also stated that a tariff war between Mexico and the U.S. would not occur.
So a little bit of he said, she said here. Trump said she's going to close the border and she's going to stop all the drugs. And she didn't really say that exactly. But I think the fact that they're talking is very good. We're hoping that this sort of pre-tariff negotiation happens with China as well for the sake of our grain markets. But for the sake of the corn market, we don't want a trade war with Mexico. Mexico has been the biggest buyer of U.S. corn the last couple of years and will probably continue to be. So I think the fact that they're talking is good. Trudeau was also at Mar-a-Lago, I think, over the weekend and talked to Trump about the same sort of issues. So as we have kind of discussed the last couple of weeks, I think there's going to be some, again, pre-tariff negotiation with all of these countries. And we hope that that's the case and that we don't get into any of these big trade wars.
AgroConsult is projecting this season's Brazilian soybean crop to be record large. The Brazilian consulting group is estimating the crop at 172.2 million metric tons. If achieved, the crop would surpass the all-time high of 162.4 million metric tons set during the 22-23 season and be nearly 11% larger than last year's crop. The USDA is estimating the crop at 169 million metric tons, while Brazil's version of the USDA CONAB is projecting the crop to reach 166.1 million metric tons. AgroConsult stated that the estimate could be revised upward due to favorable growing conditions. The consultancy group is also projecting Brazil's soybean exports to be record large at 103.4 million metric tons.
172.2 with a bias higher, so they're talking massive crop in Brazil. USDA is at 169. CONAB's actually a little bit lower than that. This is the first group that I've seen who's like really well published or followed that's above 170. But I think some of the other groups are going to follow suit, and you may see that as early as this week. The forecasts look pretty good. There's a lot of rain in the forecast for just about everywhere in Brazil. There are some pockets that are going to be drier than normal, but clearly the market is not concerned. I mean, soybean futures are lower this morning. They've been able to hold the trade above those August lows in the January 25 contract. Still not a good action though. But there's not concern about this dryness because there's still going to be rain. It's not totally dry. It's just drier than normal, maybe 60% of normal in some of these soybean areas.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about some of our premium videos from last week?
We're doing a new format with Matt, which is 20 questions with Matt. It's kind of a mailbag video, I guess. But tons of questions came in from subscribers about one thing in particular, unpriced soybeans, whether it's 24 bushels that are in the bin or 25 bushels that you're going to plant this spring. There's a lot of concern about soybeans because the market sucks. There is no profit to be found anywhere. Joe, how's this going to affect acres? What's the best course of action with regard to marketing? A lot of soybean stuff, also a lot of corn marketing stuff, a lot of capture and carry and hedging and protecting type questions from Matt. I did a video on the new soybean seasonal earlier last week, and the seasonal tendencies in the soybean market have shifted quite drastically over the last 5 years. And if you're not aware of this shift, I think you need to be, and I think it's something that should impact the way that you market grain, especially this time of year. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. You'll get our morning email every single business day, except for when we take Black Friday off at 5 a.m. Central Time. You'll get our premium videos every single business day. It's super easy to do. You can sign up on your phone in 30 seconds. We do Apple Pay, Google Pay, Cash App, credit card. The emails, the videos are all really easily accessible on your phone. They're all just click to play. There's no login instructions. It's not messy. It's very, very easy to do. Give that deal a shot this morning, guys.
U.S. soybean export sales set a marketing year high last week. Net soybean sales also surpassed pre-report expectations at 92 million bushels. The print was up 34% versus the previous week and up 31% from the prior 4-week average. China was the largest soybean buyer for the week. Net corn sales were reported at 42 million bushels. The print was down 29% from the previous week and down 46% from the prior 4-week average. Mexico was the largest corn buyer for the week. Net wheat sales were reported at 13 million bushels. The print was down 33% from the previous week and down 15% from the prior 4-week average. Unknown destinations were the largest wheat buyer for the week.
Soybean sales have recovered. We started off the marketing year very, very poor, and we've seen a big increase in sales. We're now the 6th best of the last 10 years. So I think that you're probably, as it relates to USDA projections, with soybeans, I think we're on pace to hit USDA's target, whereas a few months ago, I would have said we are not on pace, and maybe they need to come down. Corn export sales have been fantastic, and USDA is probably too low. The question here, and you got to read between the lines, is this whole front-running thing. Are global buyers really front-loading their purchase programs because of potential tariff threats and the Trump presidency, that sort of thing? And how is USDA going to handle that? I think USDA may need to come up with its wheat export number as well. USDA will be out with some new projections on Tuesday next week.
U.S. ethanol production was record high last week. Weekly output of 1.12 million barrels per day was the best for any week on record, exceeding the previous peak that was set only 2 weeks ago. Ethanol stocks were pegged at 22.9 million barrels. The print was up 1.4% compared to the previous week and up 5.6% versus the same week last year. Implied gasoline demand was up 1% compared to the previous week and up marginally versus the same week last year. On average, over the last 4 weeks, implied U.S. gasoline demand is down 1.4% compared to the same period last year.
Ethanol is projected to account for just over 36% of all demand for corn grown in the United States. And that's a number that the percentage share could actually get much larger if sustainable aviation fuel really gets to become a big deal. We could get to a point where we're using half of our corn crop for fuel. We could easily get to that point in the next, say, 5 to 10 years. So ethanol production marketing year to date is running about 4% above last year. And ethanol production and corn usage for ethanol are not the exact same thing. Yields can change and that sort of stuff. But if you were to see a 4% year over year increase and you just translated that into bushels, that'd be an extra 218 million bushels of additional demand versus USDA's current projection. I don't think this sort of pace is sustainable. I don't think you're going to end up 4% above last year. But what if you ended up 2% above last year and you picked up an extra 100 million bushels of demand? I think that would be very, very positive. So I don't really have anything bad to say about demand for corn at all. Export sales good, ethanol record high. It all looks pretty strong.
Russia has reduced its 2025 wheat export quota in an effort to lower inflation. From mid-February to the end of June, Russia's export limit will be 11 million metric tons, 62% less than the same time last year. During the first half of the export season, which runs from July through January, Russian grain exports are quota-free. The reduction in exports is due to the recent high export pace, along with a smaller wheat harvest that was caused by bad weather. Exports were also cut in an effort to rein in inflation, which is currently 8.5%. Starting on Wednesday, Russia will raise its wheat export duty to more than 18%. Russia is still expected to export 47 to 52 million metric tons of wheat this season, allowing it to remain the top global wheat exporter.
Russia wants to cut exports and the wheat market goes wild. No, that's not what happened. Kansas City wheat futures made fresh lows overnight. So the market clearly not interested in this news. Even with this headline, I'm not sure that Russian wheat exports deviate a whole lot from USDA's current estimate, which is 48 million metric tons. So no, the market has no interest in this. I was thinking when I saw this story, maybe wheat pops a little bit on this. Nope, not at all.
USDA reported multiple flash sales of soybeans last week. U.S. exporters sold 5 million bushels of beans to China for delivery during the current marketing year. Exporters also sold 36 million bushels of soybeans to unknown destinations for delivery during the current marketing year. Accumulated soybean export sales are up 9.7% compared to the same period last year.
Yeah, that 840,000 for the current marketing. It's one of the bigger flash sales we've seen as of late. I'm assuming China, but maybe not. Maybe Mexico. I don't know. It's good though. But again, soybean market not acting well, and most of that I think has to do with the idea regarding Brazil's crop prospects, which seem to be awfully good. What did cattle do last week?
Cattle futures closed mainly higher on Friday. Live cattle were 2 cents lower to 75 cents higher. Feeders saw gains ranging from 70 cents all the way up to $2.02. Cash cattle was higher last week. In Texas, cattle were $2 to $3 higher compared to the previous week at $1.90. In Kansas, cattle also sold at $1.90, which was $3 to $4 higher. Up here in Nebraska, cattle were $3 to $4 higher at $1.90 to $1.92. And then over in the Western Corn Belt, cattle were $2 to $5 higher at $1.85 to $1.90. Box beef ended the week higher last week. Week over week, choice gained $3.11 and select was up $2.23.
Outside markets fairly quiet to start the week. U.S. dollars up a little bit. Stocks are off just fractionally. Bonds are off a little bit. Gold's down $15. Crude oil is up 74 cents in the January WTI at 68.74. Have a great week, guys. We'll be back on Tuesday